Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Wednesday, August 17th, 2016. Equities markets have closed for about the last 10 minutes and are actually settling up on the day. That is after being down for the better part of the morning until minutes were released from last month's FOMC meeting. We'll touch upon what was said as well as what we're looking at for the markets over these next couple of weeks. Dow Jones Industrial closing up 21 points, about 0.1% at 18,573. Standard & Poor's also tracking higher on the day, 2179, putting it up about 3 points on the day. But take a look at the low. The low came in at around 65. You can see that here on this daily chart. We've certainly seen a pretty dynamic range and recovery. Lastly, NASDAQ also closing up almost 0.15%. at 48.04. That, of course, is the E-mini 100. Lastly, dollar is in essence unchanged, 94.79. Absolutely no doubt a really interesting unfolding of events today as the minutes were released from last month's FOMC meeting. The market was genuinely under pressure. As I said, the low today, 2165. You can see that when we look at this daily candle. Let's go ahead and blow this up a little bit. But it's quite clear when we look at a daily candle, the extreme low that we saw during the day, of course, that comes in right in here at 2165. Market opened here at approximately the market opened here at 2177.50, closed at 2180, and that's why we're getting this very, very small-bodied candle. Absolutely, this belongs to the umbrella line of candles. But really, the interesting fact about what really transpired today is the way the market reacted to the minutes being released. Now, what I'm doing is simply converting this into a 60-minute chart. And you can see that going into or just before the reading of the Fed minutes, the market really traded under pressure. You can see this is where the minutes are actually released. And what was most interesting, of course, was the fact that even though there was a lot of talk about interest rates being raised one more time this year, the way that not only the U.S. equities markets reacted, really bullish and positive to the upside, along with gold and precious metals, which had a recovery after the news came out, is really signaling the fact that investors and traders are still not convinced that we will actually see a rate hike this year. And you can see over the remainder of the trading day, around 4 hours in trading, this market came up from these lows at 2165 here to near the highs of the day. Of course, high was 2181, market closed at 2180. So right off of the highs of the day, a really, really strong recovery when you consider what was read in terms of minutes today. A quite interesting reaction to the minutes that were released today, almost exactly the opposite of what we would have expected given the tone of the minutes that were released. Now, as always, there is a little bit of disunion between different voting members of the Fed. However, it did appear to be, at least on the surface, that there would be probably one rate hike this year. Now, that should have brought pressure on the equities. They went up. The dollar, which would typically be stronger in that kind of scenario, actually traded under pressure, is still currently negative, but only slightly. So you can see that on this daily chart with a doji candle. And then the metals, of course, we'll look at gold in a little bit, but we really had an interesting fact with the December COMEX contract coming under much more pressure than spot. Obviously, It's a sense that if interest rates are raised, they'll be raised later on in the year when this December contract would really still be in effect, as opposed to spot, which can go anywhere between now and, say, October, November, or December. So you do have gold trading off about $4 on the day when we look at COMEX futures, and as I said, up ever so slightly when we look at the spot market. Of course, we'll cover that in extreme detail when we record the gold forecast on today's report. Traders, lastly, do want to take a look at the crude oil market today. Crude oil up about 30 cents per barrel, 46.89. That's where we closed at. Up about 0.6%. You can see that we're looking at a daily chart, standard candlestick format. This is today's activity right here. Although the range between the open and the close are not as great as we've seen over the last couple of days, nonetheless, it was an impressive move to the upside. Now, on this particular chart, I've added yet one more fib retracement. This fib retracement going from these lows at 39 up to these highs at 52, and then we get our different areas, 23, 38, and 50. We'll go over that in a second. The thing that I find most interesting is if we look at really the dichotomy of this major move, back mid-February, we have the market hitting those lows, double bottom at 26, trades to 52, and retraces pretty much precisely 50%. That's what this line represents. Now, we've got the 50% retracement. When we just look at this subsequent sell-off from 52 then down to 39, and we add another fib retracement, and that would be this area right here, lo and behold, the high and where the market stalled out today, 46.77, that is a 38% retracement of this move down. And considering that the market is currently at 46.88, it is just slightly above that. But my sense is this is a logical place to look for some sort of resistance come into the market. Honestly, I thought we probably would have seen it a little bit lower at about 46, but we're almost $1 away from that now. We'll have to see how this market unfolds, but I believe we should be running out of upward steam at this moment. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.